Welcome to NextGen Digital Finance, your go-to hub for mastering modern money management in the digital age. Whether you're looking to build wealth from scratch, crush debt and take control of your budget, explore fintech tools, crypto, side hustles, or investing apps, learn financial strategies tailored for Gen Z and millennials. This channel breaks down complex financial topics into clear, actionable insights, all designed for the next generation of earners, savers, and investors. Videos on digital budgeting, smart investing, side hustles, and money mindset. Honest reviews of financial apps, tools, and trends. Step-by-step guides to help you grow and manage your money confidently. Subscribe now and level up your financial future, one smart decision at a time. It's time to make your money work for you.
It's 2025 and the investing world is louder than ever. Crypto's still bouncing around, AI is trying to pick stocks for you, and TikTok gurus are promising 1,000% returns. But here's what most people won't tell you. The boring stuff, the proven strategies, they still work, and better than most of that hype. In this video, I'm going to show you exactly why index funds remain one of the smartest, safest, and most stress-free ways to build long-term wealth, especially in today's uncertain world. We'll cover what they are, how they work, why they outperform most investors, and most importantly, how you can start today, even with just a few dollars. Let's go.
Quick disclaimer. This video is for educational and entertainment purposes only. I'm not a financial advisor, and this is not financial advice. Always do your own research or speak with a licensed professional before making investment decisions. What is an index fund, really? So, what is an index fund? An index fund is like a basket of investments, usually made up of stocks or bonds, that tracks the performance of a specific part of the market. The most famous example, the S&P 500, which tracks 500 of the largest companies in the US. If you buy an S&P 500 index fund, you're not buying just one company. You're buying a tiny slice of Apple, Microsoft, Google, Tesla, Costco, Coca-Cola, and hundreds more. In one move, you get instant diversification and exposure to the entire economy. And unlike mutual funds, which are actively managed, index funds are passively managed. They don't try to beat the market, they simply match it, and that makes a huge difference.
Why index funds still dominate in 2025? One, they have incredibly low fees. Let's talk about fees. In 2025, index funds can cost as little as 0.03% in management fees. That's about 30 cents for every $1,000 invested per year. Compare that to mutual funds, which might charge 1% to 2%. That's $10 to $20 per $1,000 annually. Over 30 years, those fees can cost you tens of thousands of dollars. Index funds are cheap because there's no team of analysts constantly trading. That means more of your money stays invested, growing, and compounding. Two, they beat most investors, even the pros. Now here's the part that shocks people. Studies from Morningstar, Spiva, and other analysts consistently show that 90-95% of active fund managers fail to beat their benchmark index over a 15-year period. That's their full-time job, and they still can't beat a basic index fund. And if they can't, what are the odds that you or I can consistently outperform by stock picking or day trading on our phones between meetings? Index funds are a humble way of saying, I don't know which stocks will win, so I'll just own all of them. And historically, that's worked better than almost everything else. Three, they protect you through diversification. Diversification is like your financial seatbelt. Imagine owning 5 tech stocks. If one of them crashes, your whole portfolio suffers. But with an index fund, like the total stock market fund, you own thousands of companies. That way, even if 1 or 2 go down, others will rise and balance it out. This is especially important in 2025 when we're dealing with inflation, interest rate swings, political uncertainty, and global events. Diversification makes your portfolio more stable and predictable, and index funds give you that automatically. 4, they're perfect for passive investors. Here's something most people won't admit, even the ones with finance degrees. We're not wired to beat the market. Our emotions make us buy high and sell low. We panic when the market dips. We chase trends. Index funds take you out of the driver's seat, in a good way. You invest automatically every month, you ignore the noise, and you let compound interest and time do the heavy lifting.
How to start with index fund? Step 1. Choose a brokerage. There are plenty of options in 2025. Vanguard, still a favorite for long-term investors. Fidelity, Charles Schwab, or modern apps like M1 Finance, SoFi, or Robinhood, if you like automation and UI-friendly tools. Open an individual brokerage account or a tax-advantaged account like a Roth IRA if you're eligible. Step 2. Pick your index funds. Here are a few top choices to look into. VTSAX or VTI, Total US Stock Market. VTIAX or VXUS, Total International Market. VBTLX or BND, Total US Bond Market. These 3 funds are the core of the legendary 3-fund portfolio, giving you exposure to US stocks, international stocks, and bonds, all in one simple mix. Step 3. Automate your contributions. Set up automatic transfers. Every time you get paid, a portion of your money goes straight into your index funds. This is called dollar cost averaging, and it helps you avoid market timing mistakes. Even $50 a week adds up over time, thanks to compounding. Step 4. Do nothing, really. The hardest part of index fund investing is doing nothing. Don't check your account every day. Don't panic when the market drops. Remember, the S&P 500 has returned about 10% annually over the last 100 years, despite recessions, wars, crashes, pandemics. Staying invested is your biggest advantage. Important notes. Commemorate. Index funds are great for long-term goals, but short-term needs or retirement planning might require a broader strategy. You can combine index funds with robo-advisors, target date funds, or 401ks that include them. In 2025, with the world changing faster than ever, index funds are your anchor. They're simple, proven, and built to weather whatever happens next. If this helped you, leave a like, share it with someone who needs to hear this, and subscribe to NextGen Digital Finance, where we bring you clear, modern money strategies for the digital age. Thanks for watching, and happy investing.